right. Hi, everyone. Thank you for tuning in into the Singapore Blockchain Week Digital Asset Panel. I'm super excited to be here. And my name is Emma. I'm the CEO of Longhash Ventures. We're a blockchain-focused accelerator and investor. And join me today here, we have four very distinguished panelists. We have Lev Mazur, who is the CEO of Quantfury. We have Anton, who is the CEO of flovtec. We've got Juwan, who is the CEO of NexChange Group. We've also got Fangfang Chen, who is the Chief Operating Officer for Algorand Foundation. Welcome. So I think what we should do is we'll go around the room to let the panelists quickly introduce themselves and their background. So we'll go lady first. Fangfang, would you like to kickstart the introduction?
Sure, of course. It's a pleasure to be here. So I'm Fangfang Chen. I'm the COO for Algorand Foundation. Algorand is a pure proof-of-stake permissionless public blockchain. It's founded by Professor Silver McCauley, who's a pioneer in the cryptography research space. My background, spent the last 20 plus years in the financial services industry. Joined the foundation about a year ago. My experience is primarily in worked at Fidelity Investments, AIG, and in my last 12 years working for State Street Bank and Trust.
Welcome, Fangfang. So perhaps Juwan, you want to quickly introduce yourself?
Yes, my name is Juwan Lee. I'm the founder and CEO of NexChange. I have the great privilege of being involved in co-hosting this event, the Singapore Blockchain Week. NexChange is a venture innovation and media platform, and we do a number of different things. We are in the investment side, we're on the media side, and we're also on the venture building side. My background is I spent 30 plus years in the investment industry, from venture capital in the Silicon Valley to hedge funds like SAC Capital to running prop desk at JP Morgan and asset management companies in China. I'm very glad to be here today.
Great to have you. I'm sure your experience will add a lot of insights. Can we have Anton? Would you like to introduce yourself?
Yes. So first, thanks very much for, the invitation. It's a great way, to participate, and my first virtual experience, participating in this kind of panel. So it's a great pleasure. As mentioned, my name is Anton Gold. I'm the CEO and founder of flovtec. We are a quantitative investment firm based here in Switzerland with a focus on providing liquidity for digital assets. So that means we provide liquidity both to exchanges and for tokens. And likewise, we offer investment products for qualified professional and institutional investors. And in my previous life, as I like to say, I actually worked at a hedge fund, very similar like Juwan. As a high-frequency trader, and in 2013, I co-founded one of the first blockchain companies here in Switzerland called Like, where we built a semi-decentralized exchange.
Great to have you. I think definitely have heard loads about Like exchange and flovtec. Last but not least, Lev, can you quickly introduce yourself?
Sure. First of all, I hope everybody's safe in those challenging days, and it's a pleasure to be here with you. My name is Lev Mazer. I'm a founder and chief executive officer of Quantfury, which is a brokerage providing a global base of users, ability to trade various financial assets at real-time exchange prices without any fees or any commissions. I've been in this industry from 1992, so it's almost 28 years. Soon I have to retire, I guess. I work in a number of mutual funds, hedge funds, family offices, prop trading desks in Europe, United States, and here with a number of my colleagues and partners, financial industry veterans, we have founded Quantfury, as well as asset management company that works together with Quantfury, kind of operating that enterprise as well together with it.
When you say you've been in this industry since 1992, not the blockchain, but the trading side of things, I assume.
Well, I mean, setting trading strategies, being part of trading operations. I look at blockchain as more as a financial system rather than just blockchain by itself.
Got it. Very interesting. So I would love to dive deep into the questions to get insights from all the panelists, because they all came from very diverse backgrounds and also a mix of traditional as well as blockchain experience. So I think trading around digital assets have exploded over the last couple of years, right? So I think everyone was started excited about Web 3.0, what Web 3.0 could do. But I think digital asset infrastructure as a group has actually gained a lot of traction. So on this trading around digital assets, what are some of the key trends that you are observing? I guess this question will be extremely relevant to Anton and Lev, given you're exactly in that space. So Anton, would you like to share some insights?
Sure. So, I mean, first I would like to state, that looking back, when I started, actually, we made a tremendous progress over the last, at least 7 years for me. And when I remember, how I used to have to buy my first Bitcoin on this, there were web pages, kind of, you remember Mt. Gox, it was literally a web page where you would go buy your first Bitcoin. And kind of when I look what's happening today and the infrastructure and the facilities and the platforms that we have at hand, I would say we made a tremendous progress. And I really stand by that. I'm sure that Lev can comment on that as well. Now, since I actually come from the hedge fund industry, kind of in traditional space, my background is actually FX, foreign exchange markets. Then, to be very honest, when I compare the traditional financial markets, the digital asset blockchain industry, I really have to be honest and transparent and say that we have a long way to go. And I really state that actually from a point of view of an institutional investor or trader or an asset management company. I think the retail investors have quite a lot of options at their hand. If you kind of think about it, there's so many different exchanges. You can use different ways how to fund your account. You can pretty much buy any utility token, cryptocurrencies that you can imagine. Now, if you kind of move to the other side, and if you're talking about institutional investors, if you're talking about funds, professional investors and institutional investors actually require certain stakeholders that are in place for them to deploy capital. And I have to say on that side, we see both at flovtec, there's a severe gap in terms of what we expect and what's out there. So if you kind of ask me, where are we heading? I think there will be a lot of discussions going forward around having the right stakeholders in terms of an administrator, custodian, and off-exchange settlement infrastructure. We kind of learned the hard way over many, many years that having your digital assets, your cryptos, your funds at the exchange is not really the right way to go. And this is blasphemy in traditional world, if you say it like that. So I think this separation will happen over the next couple of years. I'm not sure how big of a priority will it be for our ecosystem, because still it's driven by retail investors or by retail traders. But I definitely see a big opportunity both on the infrastructure side and a big trend this year, options. I think options are going to take off. And this is kind of a normal evolution of financial markets, that you kind of options really grow going forward. And I see a big trend there. And then hopefully we have the facilities in place for big investors to really put their money in work, and that we benefit from all of that.
Thank you. I think a couple of things you talk about, the maturing infrastructure around admin, custodian, all the service providers around digital asset. And you also talk about options, which I think if you look at the traditional financial markets, their evolution, you need those options, derivative instruments for people to manage risk. So, and I think the market has shown evidence around that for sure. Lev, would you like to share your perspective?
Yeah, I mean, to me, there's just two trends that are emerging, and they're here basically. I mean, I'm not sure if to stay or to change. We have clearly emergence of much bigger spec play for cryptocurrencies. So you got this derivative platforms. We have a number of exchanges that decided to step above physical settlement and go to kind of a speculating on exchange rates, where people, betting against each other for a certain, price of underlying cryptocurrency asset without physical settlement, which is quite important, because when you don't have a physical settlement, it becomes a pure speculation. So you could see pretty much every exchange has a layer of derivatives. I don't know, be it healthy or not, I mean, it's another discussion, but that's clearly we don't have only BitMEX doing this. We got pretty much every exchange. And you have also emergence OTC desk that also provide constant liquidity in that kind of a manner, or also to settle. But you have today OTC desk around the world, and they can quote you consistently, Bitcoin, ETH. So there's much more liquidity, but that liquidity is really based on speculation. And then you have also, in my opinion, a certain Bitcoin-related trade, which is kind of a hedge or maybe arb against what you see in a global economy, where you have kind of central banks pumping money into the economy, and you look at the Bitcoin as kind of a safe asset and a certain hedge against all of this significant amount of fiat liquidity. And you have that probably not tremendous size of inflow, but you have an inflow into the Bitcoin of that liquidity to hedge against what's happening in the rest of the world. So people don't really look for adoption, but more look for hedging themselves on the Bitcoin side.
So do you mean, if I understand correctly, basically the more assets flowing into the digital asset space are driven by one, I guess, speculation and yield seeking. I guess the second is to protect their wealth, given the whole macro economy is changing with the QE and lots of liquidity injection by the governments.
Or make money long term, yes.
Interesting, yeah. Cool. I think Anton talked about this institutionalization of the digital asset space. I think that has been a clear trend. Say, for example, Coinbase's acquisition of Tagomi, which is an institutional focused prime brokerage platform. So on this, what kind of other examples have you observed? How is this relevant to your project? I would like to address this question to perhaps Juwan. I think you're in the hedge fund space. Have you observed any institutionalization of crypto hedge funds?
Oh yes, well, there's no segment in the digital asset space that has shown as much transition to become more institutional than the crypto hedge fund space in a short period of time. The assets under management in crypto are very small still, but if you look at it over the last year, it's doubled, but it's very small in comparison. The average fund size is also doubled, and managers are looking to attract more institutional investors, and only way they can really do that is become much more regulated and much more institutionalized. And what I would like to make some comparison is that there's a lot of similarity to the evolution of the hedge fund industry. If you make that comparison, we're probably somewhere in the mid 90s or early 90s where hedge funds were. So we have a lot of room left to go in terms of institutionalization. But what we're seeing is that what's happening in the crypto space, and crypto hedge fund is evolving much faster because there's been a roadmap. As the industry matures, it will become much more competitive, and the offerings of institutional grade products will be increased significantly. So if we look at where it needs to start, it actually has to start with the people. In the previous bull run we saw in 2017, it was littered with managers with very little investment experience, people that maybe just held a Bitcoin early, and now they started parade around like they were investment managers themselves. And what we're seeing in the last year is that the number of years of experience in these investment management firms has already doubled. And the managers are much more focused on risk management, and they come from a background from the traditional space. So when we look at the kinds of infrastructure that's required, and Anton alluded to this already, is that we need these crypto hedge funds have increased already in 1 year time the use of independent custodians and administrators, and there's also been a significant increase in independent directors on their board.
Yeah.
So when you look at in aggregate, the industry is moving towards that direction. However, the biggest problem is that the assets under management are still very small, meaning that institutions really haven't put a lot of capital into this space yet.
Do you have a rough number in terms of the total size?
Yes, well, I mean, right now it's a little over $2 billion. I mean, it's a fraction. But I think what's more important is that if you look at asset under management in terms of penetration relative to the overall crypto, market capitalization, it's far less than 1%, whereas in the traditional industry, it's like 17%. So even if crypto doesn't even grow and it just increases penetration, the overall assets under management would increase significantly. So we're nowhere near in terms of where we can be in the growth of this industry.
Yeah, very interesting. And I think when you were talking about the total AUM of all the crypto funds is around 2 billion, that reminds me of DeFi. I think DeFi AUM has recently surpassed 2 billion, and its momentum has been unstoppable, I would say, with the compound governance token being issued and the rapid growth of AUM. So with that said, I would like to direct this question to Fangfang. So what are your views regarding the growing DeFi space, and how is this relevant to your project?
Thank you. This is a fascinating space with lots of innovations and experiments, and it's very it's moving so fast. I haven't followed in the space for a week. Now I'm scratching my head about yield farming. So there's a constant innovation happening. So there's no doubt about it. But I think DeFi has a very large potential. But I would also like to think the financial innovations using blockchain technology is much broader than DeFi, as the name suggests, or as the current experiments include, right? I would, some people would like to call it open finance, finance 3.0. By that I mean a new ecosystem of financial services and products that taking frictionless out of financial transactions or reconstruct a financial transaction should be done. Why it's relevant to Algorand? Algorand is built with the purpose to take away the friction from financial transactions. A lot of the functionalities, features of Algorand blockchain is designed as such, right? There's a finality to every transaction. Every transaction, the throughput is high to support the real life, volume requirements. We have the features to allow assets to be created at a layer 1, which is the utmost security versus a smart contract. And we have, a lot of features to support the, frictionless finance. Now, I want to give a couple examples, use cases that are built on Algorand to illustrate sort of my view about DeFi or open finance. Why do I think it's much broader than just the DeFi, the lending, the innovations that we're seeing so far? Let me start with a recent strategic partnership we have with Circle. As you know, Circle created USDC. It's a regulated stablecoin, recently passed the $1 billion mark. Stablecoin in the past has always been mostly used for trading and account transfer, right? On-ramp, off-ramp, because most likely they're backed by fiat currencies. Now, Circle is actually shifting their focus and use the stable coin as a medium of exchange for real life mainstream financial adoptions. So they're creating this business account where you can open a business account. Like every SME, you can open a business account. You can pay your vendor in 4 seconds. Pay your employee, you can program, the payments, so on and so forth. The e-commerce, the cross-border payments, the use case are limitless. So that to me is very exciting space to look into. The second example is Republic, which is the largest private investment platform. They will be issuing a profit sharing token on Algorand. It's coming up in a week. And, what they are doing really is, Republic was up with the focus to democratize investment, right? Make it available to more smaller investors. and they're creating this profit sharing tokens to allow big investors and small investors to participate on the growth of this platform. Initially, they will offer it to accredited investors, but once they get the certification from ICC, they will be offering it to non-accredited investors. So I'm really curious to see how that's going. Maybe one last example is the World Chess Organization will be launching a hybrid IPO. Initially, they will be issued 5% of their 5% of share as a security token, so it's a compliant STO, and then they will be listed on a public stock exchange, right? And then the 5% token security token holders can convert if they want to. But I think the interesting part is, number one, is innovation in capital raising. More importantly, there's a strategic intent in creating this STO, because if you think about World Chess, their users are very smart, savvy, and probably more acceptable to blockchain and more acceptable to cryptocurrency. And World Chess has this ambition to use the proceeds to promote chess in the esports space. So now you're creating the token holder who also are young users who are interested in blockchain, cryptocurrency, and esports. And so this becomes an acquisition of client, but also a partner of the projects, right? So I found this type of innovation really, really fascinating. Just one last thing, Marshall Islands is issuing CBDC, sovereign wealth tokens on Algorand. And I think it would be really interesting in the COVID-19 situation, if they can use the national digital currency combined with self-sovereign identity, they can distribute the payment to help individuals and societies and small business in a much efficient and effective way. So, I think that's sort of the open finance that, I'm really excited about and hope to see more of the use case to come on board.
Well, thank you for sharing all this interesting use case. I think blockchain has definitely starts to show how you can redefine what money is, how money moves around, and what are the boundless use cases in terms of financial assets and application on top of that, whether it's DeFi or CeFi. I think stablecoins might be of extreme relevance to Anton and Lev as well. Do you want to share your perspective from trading exchange perspective? How has that actually helped you guys?
So I'm happy to share, my thoughts around that, and first make a very strong point that for some reason the community perceives, centralized financial infrastructure in the digital asset space in DeFi as competitors. And I have to say, this is kind of a quite stark revelation for me, because from a trading, asset management, liquidity provision point of view, that's actually a perfect opportunity to bridge the two together. And I think you touched upon a little bit in your question, how can a potential liquidity provider use it? And if I just have to think back a couple of years ago, if you wanted to actually move your digital assets from one trading venue to another, I mean, I can tell you it was a huge pain, especially if you had to involve the banks from the traditional financial system or actually move fiat around. It just took forever. It was not efficient. And because of that, the whole ecosystem, digital asset ecosystem, was suffering. And actually then there was, Tether was actually born, as you might remember, kind of out of pure coincidence, but actually people then realized the use case that actually it can be used as a very, very smooth experience, very smooth vehicle to move assets around different trading venues, but also to use it actually for hedging purposes if you actually don't want to take the exposure of digital assets. So I can say from a point of view of liquidity provider, there's enormous use case for stablecoins. Having said that, I would refer actually to the previous speaker who said that actually there's a bigger vision behind stablecoins, that maybe it can be used in a greater potential to help the people who really need help from stablecoins and from digital asset ecosystem. I can tell you that the asset managers and liquidity providers will survive if there are stablecoins there or not. But I think, there can be a greater potential for stablecoins than just trading. And I really agree with the previous speaker as well. And looking forward to hear what Lev has to say from a trading venue point of view.
Lev, would you like to share
Right.
your perspective?
I mean, I just can tell that off-ramping, obviously, and most of the 99.9% of the payments in the world, I think, still happen in fiat. And you know, the underlying issue is just always will be adoption. I would say the real enemy of this society and in general over the last maybe 10 to 20 years, and also financial industry, is corruption. Blockchain makes so many things transparent. And once you have transparency, you have efficiency. But also you have ability of people to have equal opportunities, whereas non-certain players have a certain advantage. And you know, if Federal Reserve will have issue stable coin, we would be able to see, you know, where the money goes, and we'll be probably to see very interesting stuff that's happening, you know, daily or quarterly and so on. And that's to do with any central bank. As of today, I really see stable coin as a very easy way to a person to off-ramp on on-ramp blockchain and just go to this fiat world where the most of the payment for that particular person needs happen. And you know, we should pray that it continue to exist, and none of the central banks pulls the plug, because they can obviously do it very quickly. Since all of that fiat that backed against that particular stablecoin that issued is located within, you know, the Fed or European Central Bank, or wherever that fiat currency is issued against that particular stablecoin. So it's a very convenient way, and you know, we should continue. So I hope so.
Yeah, I think the use case for stablecoin is just so clear, such that people are willing to still put their money into not so perfect solutions, right? Even though there's so much controversy around USDT, but still, you know, it has, I think, 60-70% of the market, and people are still making use of it for lacking of better better alternatives. But I hope to see more and more competitors coming in, and perhaps more decentralized and more resistant to the risk you've just pointed out, Lev. So I have one more question, which is kind of generally addressed to everyone who would like to step in. I think all of you would have some perspective to share, whether it's trading, asset management, or from public protocol perspective. So what are some of the key challenges in the digital asset space that you're seeing, be it technology, be it regulation, be it whatever, that you feel needs to be addressed for this to become mainstream adoption? And it's not just like small group of people like us still talking about it, right? It becomes like mainstream adoption. Any takers who would like to? Juwan, would you like to address this?
Well, let me just try to address it from a technology standpoint.
Yeah.
Just being a money manager, finding a platform that's end-to-end, one that addresses multi-asset class. You can manage on one single platform, currency pairs, margin trading, futures, options, loans. One that has connectivity to the exchanges, the dealers, the custodian, the market data providers, reporting, real-time financial reporting, accurate accounting, risk exposure, P&L. These are things which we take for granted in the traditional space, but in the crypto space is something that is disjointed, not on one platform. People have to build in-house, and there's a lot of pieces put together, and I don't think there is a strong platform that exists today. I actually defer. I mean, if you look at Quantfury platform, Quantfury app, where you can use your cryptocurrencies account balance currency to settle your profit and loss of your trading financial assets, and where all the financial assets outside of options being traded that represent the real exchange, be it, you know, Apple stock and Nasdaq and US dollar, or being its European stock Lufthansa, or being a cryptocurrency exchange, a cryptocurrency pair on Binance exchange at real prices, and that particular currency nominal value, including the futures, traded at real prices of those exchanges without fees and commissions, and where you have a smart contract and certain decentralized
financial manner, where all the trades being stored in the smart contract. So all the trades, so everybody can actually check the validity of the transactions, the validity of the prices in a smart contract that can be faked, or everybody can see that the conditions that platform provides actually exist and kept in place. I mean, and you have about 50,000 users around the world using it daily. So outside of options, but maybe when we bring options, maybe you could say that this statement is correct.
Well, but I believe that options is a very, very important part of the overall equation, right?
Yeah. Well, you're right. But you have to also look at the options as really a sophisticated tool that's not available just to 99% of the retail, because they would just not be able to. You have to have somebody who write options, and then it's a very complex tool that probably would.
Sorry, Lev, I will have to cut in. I think Juwan and you will have to take this discussion off the line because we ran out of time.
Sure.
But thank you so much for you sharing your perspective to give us a glimpse of what each of you in the forefront line building in terms of digital assets. Thank you so much for joining the panel and for NexChange in organizing the Singapore Blockchain Week. See you guys next time.
Good luck, everybody.
Thank you.
Thank you.
Bye.
Cheers.
Bye.